Well, hello and welcome to the Lending Podcast. We are your hosts. This is JB, infamous guru of mortgage. My name is Jeff Jones. And today episode is about manufactured homes and getting loans for them. So you have
It's an interesting
it's
topic.
an interesting topic. For a while, every lender had its different flavor if they were wanting to do them or not. More and more, I'm seeing lenders take it on. My first home loan was a manufactured home.
First loan
So
ever.
that's how I cut my teeth on an FHA manufactured home loan.
How'd that go?
It took a while.
We're going to talk about
We're
that.
going to talk about why.
Yes.
But we
yes.
closed. Client was super happy. The value came in great on the appraisal. So that was good. That's always a big concern is what really is the value of the manufactured home. Getting that right is critical and is one of the biggest deal killers. So we're going to go over a few deal killers. We're going to go over what to consider when comparing that to a home that's not manufactured, and I think it's going to be insightful.
Yeah, and I think the most important thing here is to always remember that there are two parts to the approval process, right? There's the borrower approval, getting the buyers actually approved, income, assets, credit, all those things, and then getting the property approved, the property meeting lending requirements with respect to insurance, with respect to title, appraisal, like you touched on. So those two components make up a mortgage closing. It's not just one or the other. And so when you look at a manufactured home, and for many of our buyers and even agents out there, there's not a defined line between a manufactured home and a single family, and there should be. That's really the takeaway from this episode is when you're looking at financing a manufactured home, it is different than financing a single family home. It's almost also kind of like condos as well. Condos are their own category. Single families and condos are different. Condos and manufactured homes are different. So just want you guys to know that there are some specific requirements we're going to go over today. And we may not touch on all the different requirements because, again, properties are different, areas are different. But we're going to touch on some things that we've seen that are snakes in the grass, so to speak, and kind of red flags to look out for. And we want to take this from the angle, too, of our listing agents or agents that might be taking on a listing of a manufactured home, how to get out in front of some of the challenges that a buyer may face when looking at your house. And then also for our buyers and our buyers agents, what to be looking for on the buyer side, and maybe some costs that you may have to incur when purchasing a manufactured home versus a regular single family. And so we're going to dive in. Jeff and I both have financed manufactured homes in our career. I'll be honest, we don't see a ton of them necessarily, but we do see enough to be educated on this topic. And we have such a great team behind us. Right. Our underwriting manager is an expert in manufactured home lending. We've learned a lot from her and really how to prepare our clients and set really good expectations as to what you may need to look at and think about when you're buying a manufactured home.
Yeah. I've been thinking about this. I think a good way to tackle this, you alluded to, is, through the process of the transaction, it's almost like I want to roadmap it. And I like what you said about getting the property ready to list and some things that can help the process go faster and better and smoother upfront, as you're listing the property or as your realtor helping your borrowers list the property. So there's some pretty big ticket items that slow down the transaction. When I mean slow down, I mean to a screeching halt.
Right.
So there are more parties involved with a manufactured home than without a manufactured home transaction. So you have the county, you have additional inspectors, you have additional insurance requirements, you have maybe updated surveys. So you do have a lot more third-party
potentially
servicers that are now involved in a transaction. So most of our closings, people put on the contract a 30-day close. That's probably 90% of our transactions. If we have people, TBD underwritten or pre-contract fully underwritten, the borrower fully underwritten, as you put, we like doing a 2 or 3 week close because we don't like waiting. We don't need to wait. So we push things as fast as we can. For manufactured homes, if I have a borrower that's looking at one or a realtor that's showing them, I let them know, please put a 45-day close on that, or even 60, depending on if there's concerns up front with the property or if it's a unique place, if it's far out
Sure.
into the count, like if it's not in your main urban area, that changes things drastically too, because then it takes longer for servicers to get out there.
That's true. And let's talk about why we might need more time.
Yeah.
So, what are some of the reports that we might need? What are some of the extra services that may be involved? So, let's talk about a
Yeah.
recent example, right? Let's talk about an example. So, the first thing I will say is there's a very important distinguishing factor between personal property
Hmm.
and real property. Let's touch on that first, and
Okay.
I'll tell you about these other services we may need. So, personal property is when a manufactured home is purchased off of the lot. Let's just say a Palm Harbor home, okay? When it's purchased off of the lot and taken to its destination, it is personal property. It's not real property until it is affixed to a foundation, a permanent foundation, and it's zoned properly, and there's a survey with the lot and block, and it's in its final resting place, so to speak, right?
Right.
It is
Because
not going to be
it was
moved.
a transported dwelling,
Right.
is what. And when we're talking real versus personal property, those definitions are coming from the county appraisal district,
That's right.
right? And so on the record of the county clerk, it has to be either real or personal,
Mm-hmm.
or maybe it's not even on there because it just
Right.
showed up. And so that is a wonderful piece for the realtor to encourage a borrower, if they haven't done that with their county, to register it as real
Real
property.
property.
Get that done now, because that is one of the slowest things. You can pay for an accelerated, expedited review of it. They're going to be requesting some docs or some forms to fill out. There's fees to fill out. It's not too expensive. The last time I did it, the unexpedited way was $150, but my borrower needed expedited, so he paid like almost $700.
Wow.
So getting that done up front saves
Mm-hmm.
the person selling the property time and money. And so that's a big one. I like that one.
And your specific example, you were refinancing that
That
borrower,
was a
if I'm not
refinance.
mistaken.
Yep.
So, if I'm understanding you correctly, the property, the house was moved from, say, the dealership, the mobile home dealership,
Hmm.
to where he's living now,
Right.
but he had never converted that personal property to real property until he tried to
That's
get a loan
right.
from you.
That's
And
right.
we must, every mortgage company is going to have manufactured home listed as real
Yeah.
property. That's like a single family home or any other
Yeah.
house.
And examples of personal properties are like RVs.
Right.
Something
It's
that
movable.
isn't permanent.
Yeah.
That's the difference. That's why it's just a piece of personal property.
Yeah.
You
And
know.
so that's one of the reasons I remember your client maybe took about 90 days to close. Again, it was a refinance, but or longer.
No, I think we got up to like 65. So it
Okay.
was a two and a
Yeah.
half
2
month
months.
process that
2
we were
months.
hoping we could do in 30, because we were naive on what came out with the inspections.
Right.
So
Right.
the inspections were
Mm-hmm.
interesting.
So
Yeah.
that's the macro view is it's got to be
Right.
real property, cannot be personal property.
Hmm.
Okay. Now let's talk about what are some of the requirements for a manufactured home when it comes to the foundation. You may hear, and if you're an agent out there listening to this, you've probably heard this. If you're a buyer, you may not have. But what has to happen on a manufactured home? The property has to be on an FHA approved foundation, which means it is on a slab or pier and beam, but it has to be an approved foundation that's been engineered to support that structure. And in many cases, we're going to need an engineer's report
Yeah.
to state that that foundation is going to support the structure. Right?
Yeah. The phrases you'll hear a lot is anchored and skirted.
Anchored and skirted.
So if you think about a manufactured home, they don't sit flush on a slab. They actually are up, right? Because there is systems on the bottom that run through the whole house, right? You got plumbing, heating, and those systems need access points under it. So that means it is going to be a little bit elevated.
Raised.
Yeah, so raised. So in order for that to be a permanent residence, anchored means obviously, it's got to have metal or some permanent beams that are connecting it to the foundation. And then skirted means it has to be totally enclosed, right? So most of those skirtings are brick. So what you're doing is you're bricking off all the bottom of it. There's other ways to skirt it, but it can't be lattice work.
Right.
It can't be just something that just covers it. It can't be hay bales. It's got to be permanently affixed. So anchored and skirted to the foundation, and that work has to be approved by an engineer,
Structural engineer.
structural engineer.
Yes.
So that's critical. So you're not just getting a normal inspector out there, you're getting a specialized inspector for manufactured homes that is actually an engineer's report. And sometimes those don't come back clean.
And that's right. And the most recent one that the
Yeah.
most recent engineer's report that we did was $875. So they're also not cheap. They're probably more than an appraisal would be.
And they're, we work with appraisals so much, right? And sometimes when something is concerning on an appraisal, it gets fixed. We ask the appraiser to go back out and reinspect. An engineer hates reinspecting properties unless they have assurances something was corrected with a legitimate contractor. Because an engineer doesn't want to, they don't go out as much. And they have a higher price point. So they don't want to go out if it's not going to pass a second time. So a reinspect on an engineer report takes longer. So I think what's really good is if the realtor not only encourages a borrower or the borrower does it themselves to get the county appraisal district to have it transferred to real, as well as they already have their engineer report.
You're talking about the seller.
The seller, yes. Yes, because you can get that before you sell the house and have it provided. As well as, I think we can move on to the next one, which to me is the survey. The property, so obviously there was a property that didn't have the dwelling on there. Now it is, making sure the survey is up to date. And a lot of times an updated flood.
Yeah, so flood surveys, also any outbuildings, any storage sheds,
pump house,
patios that are attached to the property, that also those need to be part of the engineer's report as well. A big deal killer that we've seen also when it comes to these is, has the property ever been moved from its original position? If it's been moved, that's potentially a deal killer right there. So it went to a destination, it lived there for a little bit, now it's been moved to another destination. That is a complete no-no when it comes to mortgage financing. Really hard. Traditional mortgage financing. Is there a lender out there that might be able to do those? Perhaps. Is that something we would do, or a traditional mortgage bank, or most lenders? No.
Yeah, and those and we do mortgages that are what we call non-qualified mortgages, non-QM. They're not Fannie or Freddie approved, and we do have some brokerage options where we do have banks that have a taste for it. So it's not like that is impossible. It's just not going to go the same route.
Right.
And there are different hoops to jump through for each program of those.
Yeah.
Yeah. So most of what we're talking about today is conventional, FHA, VA.
That's right.
USDA.
That's right. Yeah. Now let's talk about single wides versus double wides.
Oh yeah.
Okay. The majority of the lenders out there, mortgage lenders that loan on manufactured homes, will only do double wide manufactured homes. For whatever reason, I don't really know, but that's just the bottom line. We actually do single wides as well. I just closed one for one of our veteran clients a week or two ago, and it was tricky. It was actually turned down from another national lender that you would recognize if I told you the name, but I'm not going to for this episode. But they turned it down. They do not do single wide manufactured homes. And we took this disabled veteran client on. We were able to get it through underwriting, closed, and funded in about 30 days. And that's a pretty quick turn time, relative.
And that was just 2 weeks ago.
That was just, this month.
You worked a miracle on that one.
Worked a miracle. My underwriter worked a miracle.
We love saving loans that other banks won't take.
That's right. That's my third one this month.
Good job.
Third rescue this month.
Yeah.
So traditionally your single wide requirements and your double wide requirements will be slightly different. Okay. We're going to really scrutinize those single wides a little closer, because again, we need to make sure that they are properly anchored, properly, I guess that's the right word, anchored to the foundation.
That, and it doesn't fall into the designation of a tiny home.
True.
Right.
So square footage wise.
The square footage has to be within, I think every county has a different definition of a tiny home. So, but anyway, go ahead.
Yeah. So this was one of those where just by classification of the property, it was turned down, and the borrower was very strong, great credit, good assets, good job, low debt to income ratios. Nice. Again, that's one of those situations where the borrower fit all the right profiles, and then the property had issues at the other bank, and then we were able to rescue it. So again, when it comes to these property types that you have questions on, it's really good to ask a lot of questions up front If you're a seller looking to sell your home, get with your real estate agent and ask the questions. Is there anything we need to do to prep our house to get it sold?
Right.
And on the buyer and the buyer's agent side, really ask a lot of questions. Dive into anything you can find out about the structure and get with your lender. Ask them specifically, is this a property that is financeable?
Mm-hmm.
And there are many cases where there's work that has to be done to get the property to get approved. And it's every property is different.
Yeah, and you really have to look at the systems that are there too. So if something is, in an urban area, it might be tied into sewer, city water. But if something is more out there, in the sticks is what we used to call it back home.
Right.
You had your own septic, and so you have to have a septic inspection. You had your own well, so you had to have that, checked. Make sure it wasn't contaminated, running well, has a good
Mm-hmm.
life on the pump, and everything is sealed. So, like, if there is additional systems that are out of the norm, making sure that is buttoned up front as soon as possible is huge.
Let's touch on water for a second. So I have a client, but we were doing his loan a couple
Mhm.
years ago, VA mortgage on. It was not a manufactured home, but it had a well on the property.
Mhm.
All VA mortgages, manufactured or not, if there's a well on the property, must have a water test. So we had a
Oh
water
boy.
test done. Guess what? There was a bacteria in the water that was located and found. Obviously, we treated it. They would have never known,
Yeah.
right? This family would have never known that there was a certain bacteria in the
Yeah.
water. Although it was a micro dose, still doesn't matter. It could have affected their health. So keep in mind a lot of the things we ask for as lenders, we are protecting you. We're
That's
protecting
good.
our collateral.
Yeah.
We're protecting our investment. Yes, because we're loaning based on your credentials
Mhm.
as a borrower. We're using the house as collateral. We're looking out for the buyer. So many things that we ask for, it seems like we're picking on you. We're asking for certain
Yeah.
things, and that's not the case. We're making sure that we're meeting all the requirements. We have that additional layer of protection in place to, yes, protect our collateral. It's really also to protect you
Yeah.
as the buyer.
No, that's good. So I felt like we went through a lot of good things up front that a seller can, you know, just get ready for. Some of that stuff can be done upfront by the seller. Some stuff happens during the transaction. Um, I really like talking to my borrowers about insurance costs, homeowners insurance cost on a manufactured home. On our end as a lender, we put estimates together. So we're estimating monthly payments for you, qualifying you on your estimated monthly payment. One of the big factors on that is what the homeowner's insurance will be on that property. I was talking to one of my insurance guy on Tuesday about manufactured home insurance, and he's like, they need to get a quote on every manufactured home they're looking at because
Yes.
the pricing varies so tragically. And when I mean tragically, I mean it is a deal killer on some of these.
Yeah.
So you can get a quote for one manufactured home over here, and you'll get one over here, and it'll be twice as much.
Mm-hmm.
You know, um, on two different manufactured
Mm-hmm.
homes. Might even be the same insurance carrier, but the price on this one compared to that one based on roof size, build quality, area it's in, insurance claims in that area, manufactured home uh, values in that area are all over the map, compared to this other area where it's more of demand. So, all that to say is he says if they're looking at a manufactured home, have them get a quote over the phone first
Yes.
from an insurance carrier before they put an offer in.
Yes.
Before the offer goes in, get an insurance quote.
Mm-hmm.
So that was a big deal.
Especially, yeah, it's a huge deal, and especially if the debt to income ratios are a little tight
It's tight.
already. So if you're really stretching your approval amount,
Yeah.
and the interest rate, of course, is critical to determine payment. The home insurance, like you're saying, and it might be $100 a month, but it's probably going to be two or three or $400 a month. Like and that's a huge difference from $100
Right.
a month to $300 a month. $200 delta on that type of property could really affect a borrower, especially if you're
Yeah.
looking at two different properties and you get two different quotes, and it's kind of a toss up between which property you're going to look at purchasing.
Yeah.
That lower insurance cost on this property might be the deciding factor instead of just making the offer because you like both properties the best. Maybe one's a little less price or something, but if the home insurance is that much different on two different properties, that may influence your decision.
Yeah, and what was neat was, this insurance agent, we were also talking about coastal properties.
Hmm. Oh gosh.
And if you're looking along an area that has high claims, and your property has a lower build quality, which a manufactured home build quality is considered lower than a non-manufactured
Yes.
than a real property. So what that means is, you know, there's more insurance claims on
Yeah.
those in that area because they don't last up to a hurricane or wind damage. There's replacement more on windows. So whatever it might be on the lower quality build, it's a higher insurance claim
Higher
rate.
risk for the insurance
So it's a
company.
higher risk.
Hmm.
So it's not an emotional decision that an insurance company is giving of like, well, we just don't like manufactured homes. It's actually a data driven decision that
Yes.
manufactured home insurance may cost more in that area because of how much damage that area sees in storms.
That's right. Yeah, that's good. There's so many more pieces of the puzzle
Yes.
as well.
Yeah.
Hopefully this gave you a little insight into how we're evaluating the structure, right?
Yeah.
As we're providing guidance for you throughout the process, and hopefully it may have helped a seller or two out there who may
Hmm.
look to sell their property soon. I mean, again, I think that the takeaway there would be understand that you might want to go ahead and get an engineer's report on your
Yeah.
property to find out what you may need to do as a seller to prepare, and then also better market your property. Because if you've already done that and checked that box, you can put that in the listing. We have an engineer's report. Our foundation's solid. We're ready to rock and roll. This property is really ready to be sold.
Yeah.
Versus if you skip that step and then you're under contract, then the buyer finds out through their own engineer's report that the property needs a lot of work. It could really stall or kill the deal.
Yeah, and I want people, if they're looking at manufactured homes, also kind of have a long forecast too of
Yes.
return value. So the example of my first loan from 4 years ago, or is it five,
4 or 5, yeah.
four and a half? I'll just say that. Um, he has looked at a value of his property doubling since then.
Mm-hmm.
So great story. He bought 10 acres, went and bought a manufactured home, had it anchored skirted, beautiful property. It's a double wide. It's gorgeous, 10 acres, pretty far out there, but his value has doubled since he owned it.
Yeah.
So he's looking at a really good return when he
Mm-hmm.
sells.
Yeah, that's great. Yeah, we see that. I mean, there's so much demand for
Yeah,
land. I think COVID drove a lot of that. Right, people want
yeah,
some elbow room in their with their property, a half an acre or more, and so this is a common. Oh, I want to talk about one more thing.
yeah.
So this is a common desire, right, to buy acreage. So one quick success story: we had a client. It was about 2 years ago that had 11 acres up in Liberty Hill, Northwest Austin, and the property itself was beautiful, and it had a manufactured home on the property. They did not want to keep the manufactured home. It was sitting in a spot where they wanted to build their forever home, right? So they
Nice.
were going to get rid of the manufactured home and build something.
Hmm.
So this was an interesting scenario because when we're loaning on a property, mortgage companies loaning on a property, we're using the structure as collateral, right?
Right.
Well, the structure in this case, with 11 acres being worth, at that time, it was probably worth over $500,000 just for the land without the structure. The manufactured home in that case wasn't adding a ton of value to the overall appraisal. So we actually loaned the money based on just the land value.
Nice.
We closed on that property just on a land loan. They sold the manufactured home to someone else that bought it for like 75 grand, removed the manufactured home from the property, and then now they're building their dream home. And so these are the types of scenarios where maybe that's the case, or maybe you want to keep the manufactured home, live in it while you're building your dream home, or you're building a
Right.
barn dominium, or you're building a custom home, or whatever. So just talking through those different scenarios, they're fun to put together. We feel like we've kind of seen it all. I know every day we see something new, but there's a million different examples out there of how to structure the loan. And I think the takeaway from that example was had we loaned the money on the manufactured home itself, they would not have been able to remove the manufactured home from the property because the collateral, the structure, would have been the basis for the loan. So we lent just on the land. They were able to remove that property, got $75,000 in cash, and then
Nice.
went and put that towards the build.
That's nice.
So,
I mean, I love hearing your story. So, I mean, you're making dreams come true, right? And we try to find a way for people to win their dreams. And I think that making things happen sometimes takes thinking outside the box. It takes programs that are not usual or typical because not everyone's scenario is the same. And, just the fact that this month alone, you're rescuing 3 loans that other lenders couldn't do, it just speaks to how I want people to not give up on their dreams, right? And talk to somebody that might be able to find a way to make it happen for them. Um, I got a commercial land deal that I found a way for a friend of mine to do it because I had 9 channels that turned him down, but I had a 10th channel that my friend can do, and so he was able to close on
that's
it.
great.
And like there was a Facebook post yesterday thanking me for making it happen for him
That's cool.
because we have a big network of people that will really make things happen and get it done.
That's
So
true. That's
I
true.
think this was a good episode.
That's a wrap. Yeah.
Yeah.
Thanks for being with us again
So
today.
thank you. Yeah, go ahead.
Cool.
Close us
No,
out.
close us out.
Okay.
No.
I'll close this out. Thank you for listening to the Lending Podcast with JB and myself, Jeff Jones. Please like, subscribe, share. We have over 110 subscribers. Love to get to 500. We are here for you. Please give us comments of other things you want to listen to. We are listening to you as well. Thank you so much. Have a great day.
That's right. Thanks for being with us. See you next time.
Bye.